Welcome to Midcap Microscope. Well, today the stock on our radar is Whirlpool of India, a stock that's been on a roller coaster ride. It's dropped nearly 50% from its peak, but after this steep correction, the big question is, how much of the bad news is in the price? Well, what was the key reason first for the sharp fall we saw in the stock price? The promoter entity, Whirlpool Corporation, announced its plans to reduce its stake in the Indian entity from around 51% to around 20% by the middle to the end of 2025. Now that's a significant sell down, and this is not their first move. Last year they offloaded close to around 24% stake for around $470 million. They cited high valuations. But globally, Whirlpool has been exiting various businesses while holding minority stakes in Whirlpool China and its EMEA joint venture. So in that sort of a backdrop, maybe this move isn't entirely surprising. But time will tell, what does it mean for the company's future here in India? Well, beyond the promoter stake overhang, there's another key risk. The royalty and the brand licensing fee, which is currently at around 1.4%. Any modifications here could impact the earnings, and the market is waiting for clarity on this front. But let's talk about the business itself. Whirlpool India's revenue comes in mainly from the refrigerators and the washing machines business. And they've also been expanding in the kitchen appliances space as they've increased their stake in Elica, which now contributes close to around 7% of the total revenue mix. And under the leadership of Mr. Narasimhan Ishwar, well, the company has made quite a turnaround. Their market share in refrigerators as well as washing machines has improved. They've undertaken various cost-cutting measures which have boosted their gross margins. And the working capital management as well has got strengthened. Remember, Whirlpool India's cash in books is roughly around 25% of its market cap. And that's something that investors, they always like to see. Well, moving to the valuations front, the stock now trades at under 30 times its earnings. That's at a sharp discount in comparison to its long-term averages when it's traded at around 45 times. So is this an opportunity or is it a value trap? Well, from here on, there are a few critical factors you need to watch. Will LG India's upcoming IPO have a bit of a positive rub-off on the entire sector? At what valuation does the promoter sell its remaining stake? And most importantly, will the buyer be strategic in nature? Well, it's been a whirly path for Whirlpool India. Plenty of twists and turns. But valuations are now lower. Is the worst priced in? Let's see how this one plays out. Well, thanks so much for tuning in to CNBC TV18. Make sure you follow us and stay updated on all our social media platforms.